In the equity market, we're looking at a rebound late in the day. Stocks were mixed most of the day, but the Nasdaq completed its fourth up day in the last five, although it's going to need some follow through to change the weak tone of the last, say, 15 sessions. Nasdaq has rebounded off the April 19th low close by about 3%, but it's fighting with some short-term resistance. You see it near the highs today, 17,793.25. That's up 1.25%. There's still a little bit of time left in the session, but that's where we're at right now. We are now only up about 0.9% on the day. The low today, 17,399.25. That was down 1%. So overall, not a ton of movement either up or down, even though today we had the FOMC decision. And the Fed did leave rates unchanged, but was just dovish enough to support equity markets. The Fed said they are less confident that inflation will ease, but they will slow the pace of the balance sheet runoff, which in theory would be a little bit of a mini easing itself. And they believe the current rates are still restrictive. They said inflation has not made significant enough movement toward 2% lately, but they still are confident that rates are appropriate. Jerome Powell made no real comments toward whether they were going to hike rates. He basically cut that off quickly, but didn't say whether there was enough time to cut rates anymore this year. The market clearly interpreted that they would, and that was the rising tide that lifted all sectors. All sectors turned positive today, except for consumer discretionary and energy. This is exactly what you would expect when you see such a big move down in yields. We ended up with the 2-year down 8 basis points, the 5-year down 8, the 10-year down 7, and the 30-year down 3. No real change in the inversion, but all of that supported equity markets, specifically the Nasdaq.